This is going to be one of the watershed days in financial markets history.
It was a manic Monday in the financial markets. The Dow tumbled more than 500 points after two pillars of the street tumbled over the weekend. Lehman Brothers, a 158-year-old firm, filed for bankruptcy.
I don't think anyone really expected a bank as big as Lehman to be in a position that it's in now.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
I'm starting to find another job.
Meanwhile, Merrill Lynch, fearing it could be next, agreed in an act of desperation to a shotgun marriage with Bank of America. Merrill, the country's biggest brokerage with 60,000 employees, had been battered by nearly $50 billion in mortgage-related losses.
It is definitely a very, very difficult time, and it's not going to get better quickly.
So in just 6 months, 3 of the 5 biggest independent firms on Wall Street have now disappeared. Bear Stearns, which collapsed last spring, Lehman Brothers, and Merrill Lynch. Treasury Secretary Henry Paulson tried to reassure investors today.
The American people can remain confident in the soundness and the resilience of our financial system.
Paulson attempted to broker a deal to sell Lehman over the weekend, but unlike the buyout deal for Bear Stearns, the government would not offer any financial guarantees.
I never once considered that it was appropriate to put taxpayer money on the line in resolving Lehman Brothers.
It would have required an $85 billion subsidy to keep afloat. Overall, I estimate it's going to cost at least $400 billion if you wanted to bail out the whole bunch. They're certainly not worth it. It's better to let them fail.
Insurance giant AIG is the next name on the list of troubled companies. It's looking for $40 billion in bridge loans.
Some people say this doesn't stop until the housing hits bottom. You think that's true?
I think that's probably correct.
Veteran trader Art Cashin believes there could be more casualties.
This is the 5th time we've seen this movie. And you sit on the edge of your seat and you yell at whichever character it is, don't go into that woodshed. But they keep going in.
The Federal Reserve meets tomorrow. The expectation before the events of this past weekend was that the Fed would sit tight on interest rates. But now some are actually forecasting another Fed rate cut tomorrow. Katie?
And Anthony, I know individual investors don't have their money in Lehman Brothers. It's those big corporate institutions that are most directly impacted by the bankruptcy. So what will happen to the assets that are left?
Yeah, Lehman, Katie, actually has $600 billion worth of assets. Some of those profitable ones, and there are some, will get sold off. The others will get divided up in bankruptcy court, and that could take years. It's important to note here, Katie, that one reason the Fed and the Treasury did not inject government money in a deal to try to save Lehman was that they thought many of their clients had time to anticipate all this. Katie?
All right, Anthony Mason on Wall Street. Anthony, thank you.